This is Osprey from MyChartCoach.com, and in this video we're going to take a look at the indices. We're going to look at volatility, the treasuries, and then a couple of stocks to take a look at in the technology sector. So first up, yeah, you can see here it was a red day today. So followed through with another red day for the markets. They were hanging in there, and it ended up selling off the last hour of the day, and as you can see, VIX was up again. So we had follow through for VIX, and then follow through to the downside for all the indices. So this is signaling downside risk, especially when you take in account over here. Look at the 30-year and the 10-year. They were both down today as well. So we had a huge sell-off in the markets, and the treasuries were down as well. So that's just a major red flag in my opinion. Right now we have the confirmation for the Dow Jones Industrial Average. Notice how of the bearish reversal confirmation, it closed below 50 on RSI. Fasto is now below 80. Notice how plus DI is pulling away from minus DI. And then yesterday, the bearish engulfing reversal pattern formed. And so that's a really strong reversal pattern. And that pattern did end up getting confirmed today. And there was a close below the two key levels that needed to hold. The green line, which is the 50-day simple moving average, and it closed right below the middle Bollinger Band at 25,039. So if you see the Dow Jones Industrial Average failing to get back above 25,039, that's going to be a red flag. That's going to signal continuation of this previous downtrend. The middle Bollinger Band is the top of the bearish channel, the bearish lower Bollinger Band channel. The lower Bollinger Band, the solid purple line, is the bottom of the channel, and the dotted purple line, the middle Bollinger Band, is the top of the channel. So it came through, it busted through the top of the channel trying to get a new uptrend going, but now it's pulling back. And so with it pulling back below the middle Bollinger Band, it could be a signal that this previous downtrend is going to continue. Now it's right on the 50-yard line here. It could bounce, and if it does bounce, it needs to get above the 50-day simple moving average at 25,281. Now the Fed is speaking tomorrow at 7:30 in the morning, so usually when the Fed speaks, there's pressure on the markets. Now, if for some reason the markets bounce and they run while the Fed is speaking, that would be a bullish change in trend, and that is what the bulls are looking for here. They're not looking for another red day tomorrow. Obviously, if there is a close below the middle Bollinger Band again, that could signal downside risk, putting this 100-day simple moving average at 24,410 on deck. Okay, now let's take a look at SPX. This is the S&P 500 large cap index, and notice it dropped back below 50, so it failed to stay above that 50 level, and it also had the bearish crossover on Fasto, and now it's below 80. These are signals the chart's cooling down, and so this had formed the bearish engulfing reversal pattern as well yesterday, and that pattern did get confirmed today. So there was confirmation, and there also on these charts there was the drop below EMA 4 and 8, okay, and also on here EMA 13. Notice how the pink, lime, and green lines have been holding. There was a close above EMA 4 on the 12th, and so this is the first close below since this candle right here since that big run, and so it's just a signal the chart's cooling down. It needs to get back above that level and the 50-day simple moving average at 27.36. That's the green line here. If they turn into resistance and you see a close below that dotted purple line, which is the middle Bollinger Band at 27.11, that's going to signal downside risk. 27.11 is the big level to hold. If you drops below, then you're looking at the 100-day simple moving average at 26.63 being retested. It signals that the new uptrend isn't happening. So this is a really crucial moment, place on the charts for S&P 500 and the Dow Jones Industrial Average. They need to follow through and bounce. If they drop lower, it's going to signal downside risk. Now here's the COMPQ, the ticker symbol. This is for NASDAQ Composite. You can see it was down on the day as well. It has been the strongest, and it's still above 50 on RSI. Fasto did creep below 80, and it did drop below the red line. The black line's below the red line, so that is a red flag. You do have a descending resistance pattern going now, and so that's going to need to break. So that's something to look for. A break above 7,400 would signal it's cooking again. And then you have it's just basically the chart is breaking down. It formed a bearish one black crow reversal pattern yesterday, and so this is another strong reversal pattern. That pattern was confirmed today with the red candle and the close lower. Now it closed right below EMA 8 at 72.74, and it did close below EMA 4. That is a red flag. This is the first close close below the pink line here since all the way back here, since the bounce started. Once it got above on the 12th, the chart's been super bullish and the signal's been to ride. Today with the close below, that's a bearish change in trend, and now the signal's to jump off. And what happened, I'll give you an example, down here, it's below EMA 4, right? And now it's above. It rode the whole way, right? All the way to right here, and then it closed below on this candle, and then look what happened. The chart broke down. And so that's an easy signal, for people that are just starting off with technical analysis and you're a swing trader, ride EMA 4 up. When there's a close below on the daily chart, you either get off to the sidelines or you jump, or you jump on something to ride it down, a bear ETF. Okay, so now it needs to get back above EMA 4. It could retrace down here to the middle Bollinger Band and the 50-day simple moving average at 71.69 and 71.74. If those levels hold, this uptrend will continue. Okay, that'll be a signal that uptrend is still intact, because this is still above the middle Bollinger Band. Okay, it's still above the 50-day simple moving average. It's just pulling back here. It failed to make a new high, which is a red flag. Anytime that it fails to get up, a high was made, it pulled back, and then it failed to even retest that new high. So that was a sign of weakness. If it gets below the 71.70 level, that would be a red flag, like the other indices I just showed you. And now look at TNX. Okay, so we're looking at the 10-year Treasury, and as you can see here, it was down today. As you can see, it was down 1%. And so even though this was down today, it pulled back. It actually had a gap down open. It traded lower overnight. And then yeah, you can see here it's hitting EMA 13. It has to stay above that middle Bollinger Band at 28.53. If it drops below, that would be a signal that the chart's breaking down and a new downtrend could be starting. Now the interesting thing is that the markets were down heavy today on a day that the treasuries were down. And so that's just showing that there's extra pressure on the markets right now. As you can see, the 30-year, this is TYX, the 30-year U.S. Treasury, and notice it had the big gap down today as well, and that was boosting the markets, but it closed at low of day right at that middle Bollinger Band. This is the lowest close for the 30-year in quite some time, and if it drops below the middle Bollinger Band at 31.23, that could be something that could be bullish for the markets. If the 30-year breaks down and starts hitting new low levels, that would be very bullish, I would think. And so this might be the savior if the 30 and the 10-year keep breaking down. Now if they bounce here, that could add extra pressure. I just thought that was interesting that correlation wasn't working today, that they were both down on the same time. Now if you look at UVXY, VIX spiked again today, and so UVXY was up, TVIX, VIX, VXX, all the different ways to play volatility. They spiked today, up nearly 6%, back above 50 on RSI, and then you have back above 20 on Fasto, and then down here there was a bullish reversal pattern, that formed yesterday. It formed bullish kicking reversal pattern, and so today the white candle has confirmed that pattern. Now it's hitting the next key resistance level. That's the middle Bollinger Band at 1750. If it fails to get above 1750, that would signal the top of the bounce, that it's below the middle Bollinger Band. It's starting a new downtrend. Now if you see UVXY above 750 and it closes above that level, that would be really bullish, and it could get this previous uptrend going again. Notice how the middle Bollinger Band had been holding until it dropped on this red candle, until support broke and it dropped below. And so if it got back above, that would signal continuation of this previous trend. So yeah, it's a really important level, 1750. It needs to get above to head higher. And so now look at the SPXS. This is the Drixon daily S&P bear, 500 bear 3 times. That's a mouthful. Basically, yeah, this is shorting the S&P 500. As you can see, it ran into the close today. It has 2 days in a row where the last trade of the day was a high of day, and it closed right at that 50-day simple moving average. That's at 27.87, and so it needs to close above that level to head higher. If it fails to close above that level, then that could signal a temporary top. This is a huge resistance level on the chart. As you can see, it tried to get above that level after dropping below on this candle, and it failed to do so. And so that has been a huge level. If you see a break above, that's going to be a bullish change in trend for SPXS. It's going to signal more upside. And then what you want to see is a break above the middle Bollinger Band at 28.21. And so a close above that level would signal the possible start of a new uptrend. So this is a crucial level for SPXS. It could top out here. So it did form bullish engulfing reversal pattern yesterday, and the white candle today, did confirm that pattern. So once again, we have another bullish reversal confirmation for a bear ETF. Now another one to look at is TZA. If we look up here at IWM, okay, that's the Russell 2000. I meant to have this on here for you. You'll see here that the small caps were under big pressure, and so out of the different indices, the Russell 2000 has been the most brutal. Okay, so it was the leader. It was really strong, and then it pulled back very sharply. It got back above the middle Bollinger Band, and then yesterday it formed that bearish engulfing reversal pattern like the other patterns I showed you. The red candle was engulfing the previous white candle, and then yesterday it closed below that 50-day simple moving average and below EMA's 4 and 8. Well, today, what we were looking for is for that middle Bollinger Band and the 50 or 100-day simple moving average to hold, and I said keep an eye on 150, 150. A break below would signal downside risk, and that's exactly what happened today. It dropped down to 150, so 150.35, and so that was a very bearish close. If that 150, 150 now turns into resistance, that's going to signal a downtrend, and you could see it working its way all the way back down to 145. So this was a major bearish close. Notice the volume. Okay, so we had the light volume, and then boom, we have a major down day on a volume spike. Let's take a look back here real quick. Volume was pretty solid for INDU, even though it's not great. But yeah, look at the S&P 500. It was actually a larger volume day today. So that's not what you want to see when you're a bull. That you don't want to see a volume spike on the down day. And so that's just signals. And same thing. Look, so people were really locking them in. Also, a volume spike on the Nasdaq. It was the largest volume day since back here in the second week of February, and it was on a down day, and so that just signals extra downside risk. So if you look here, we have TZA is the small cap bear 3 times, and so you can see this was a good moneymaker today. It closed up 5%, so congrats everybody that got on this. It's up above 50 now in RSI, so it's heating up, and then Fasto's above 20, and then notice the bullish crossover here. That's why I was telling everybody about these plays, because the charts were set up. I mean, yesterday was the good low entry point. We had been putting out alerts all in the chat, and so yeah, congrats to everybody in the chat that's been trading the ETFs. Way to trade. We were on top of this reversal. This one didn't catch us off guard. Totally nailed actually the reversal perfectly here yesterday, and then today there was a follow through after closing yesterday above that 50-day simple moving average. It closed today above the middle Bollinger Band at 1234, and so if that level turns into support, that signals continuation of the previous downtrend or previous uptrend. Notice how it had hit that level and then it dropped below. Well, now it's back above, and so when it closed above the middle Bollinger Band back here in the end of January, that signaled the start of the uptrend. That's what you're looking for here if you're a bull on TZA, and so what you're looking for now is a close above that 100-day simple moving average at 1254. So above 1254 is going to be bullish, and then you can see it run back up to test these previous levels. You're looking at 1320 as a big level to break. Okay, so yeah, big move for TZA. It did form the bullish engulfing reversal pattern yesterday, and that pattern was confirmed today. So another bullish reversal confirmation. You have the big white candle engulfing the previous red candle. That's a very, very strong reversal pattern. So take note on that. Many times you get confirmation on a bearish engulfing. Okay, now I'll give you a couple of stocks to look at. They're going to show you a closer look at the pullback, what's really going on. And I think these are 3 important ones because they have been leading the way since technology has been the hottest sector, and so it's been the most bullish. And so these stocks that have been up here at the double top levels, that retraced all the way from their highs, if they fail to stay above that level, if they find resistance at the double top, that's a clue that the markets are hitting resistance and could pull back. And so I used Intel last night as an example, and it did close down today, 1.2%. So congrats to everybody that was following. I did recommend that puts, that this was looking like a top. You know, it had all the telltale signs. You know, I mentioned how they even pumped it on CNBC. You know, that was the super sell signal right there. You know, you're getting the pump at the top of the run. You know, you can't trust the talking heads to think they're going to give you really good information to make money. They've already made money by the time they tell you about it. And so if you look here, there was the double top and the 3 gaps up signaled risk for Intel. You know, it formed the top here, it pulled down, bounced off of the 100, and then yesterday it formed a double top, and then it had the long upper wick, which signaled profit taking. You know, and the candle was above the upper Bollinger Band, just all signal that it was taking a breather. You know, this could be a one-day event, and it could keep pushing higher. You know, it was just set up to take a breather today, okay? It's still in a strong uptrend. It's just double top now. So now it has to get above this 50 resistance zone. You know, if it can get above that 50 level, then that's going to signal it wants to head higher. If you see it below 50, that's going to signal downside risk. It's pulling back in this previous pattern. And so what we're looking for now is this gap to fill between high of day on the 26th and low of day on the 27th. You know, a drop down here to EMA 4 at 483 would fill that gap. And then if it got below EMA 4, we'd be looking for a drop down to EMA 8 to fill the second gap, okay, between the 23rd and the 26th. There's 2 unfilled gaps in the chart. So it looked ripe for a potential bear attack if a double top was formed. You know, a pullback to fill the gaps. It could fill the gaps, bounce, and then come back up and test the resistance again and break out higher. You know, it just, this was set up for a temporary cool down. And then, you know, bearish 3 gap ups, reversal pattern did form yesterday. And that pattern was confirmed today by the red candle. So you had very strong confirmation with that big red candle. Okay, and then if you look at the 15-minute chart, this is the Intel 15-minute chart that we posted yesterday in our chat. And you know, this is, I think I don't know, I think I forgot to put this in the video last night, but this was from our chat yesterday, and we were, you know, charting Intel, and you could see how it formed. You know, it had a descending triangle pattern, and then it had this symmetrical triangle pattern within the pattern intraday, and then this close end of day below the ascending support line. Okay, it signaled downside risk, and it was on a big volume spike. And then, you know, today it ended up, you know, pulling back and closing lower. And then it has this descending resistance line. And notice how the candles got above, and then they came back below. You know, and they worked right back into the pattern. And then now notice how there was a horizontal support line that was set up with the close, low close for today, and then notice the close was below that level. That usually signals more downside risk. Just like this close yesterday below the key support level signaled more downside risk, this close is signaling that it could drop lower. That's what the charts are signaling, not me, the charts. I'm just interpreting the charts. I'm just the messenger. Don't kill the messenger. The 100 simple moving average here at 49 is the big level to hold. If you see it drop below 49, that's where it could really get moving. And then you have the, you know, the second gap over here. You know, you have this first gap right here between the high here and then the low. And so you could see a drop down to that 49 level, you know, fill that, and then you've got the big drop down here, you know, between the low on this day and the high on this day, down to the 200 would fill the second gap. I think it's reasonable to think if the markets are cooling down that it pulls back to there. Now, like I said earlier, you know, the 10-year and the 30-year, it's just interesting that they pulled back. If they get moving, you know, I think that would be bullish for the markets. Well, now let's take a look at Amazon. Okay, so Amazon has been forming this really interesting pattern after breaking out above the double top level. So this is what everybody wanted Intel to do. That's a bull, and it could still do that. This is what you want to have happen. It went up and hit a top, it came down, it found the bottom, and then it came back up to the double top level and it broke out above. Okay, so these candles broke above the double top, and so it's above the double top zone, you know, unlike Intel that hit double top, you know, and it's finding resistance, but Intel can still break above. You know, this found some resistance as well. You're always going to find some resistance at the double top usually, but it's about breaking out and heading higher. And so Intel could follow Amazon and head higher. We'll just have to see. It's going to be, you know, it's really easy now. You can just use that double top level for Intel, and if it stays above that level, it means go long. If it drops below, that means consolidation. And so right now, Amazon, I feel like, is a pretty easy chart to follow. I'm just watching EMA 4 at 1507. You know, it keeps forming these kind of, you know, very small candles in a tight trade trading range. It's barely creeping higher. It feels like it doesn't want to go higher to me. I find it very hard to believe it's going to break out here at these elevated levels without taking another breather first. Watch 1507. If you see Amazon drop below 1507, that's going to be your signal it's cooling down, and I think it'll drop below 1500, and you'll see 1490 tested, the EMA 8 down there at 1490. And so yeah, but it seems to me like it's set up right now to drop below 15. As long as it stays above, notice how the double top levels lined up with the middle Bollinger Band at 1442. As long as it stays above that level, the uptrend should continue. As long as the EMA 4 is holding, if you're a swing trader, the signal is to keep riding. But once it closes below, that's when you're going to start seeing some consolidation. It doesn't close below very often, but when it does, you can see here on the close below in February, that's when it got a little wild. So it's been really, really steady, but that could end soon. It did form a bearish dark cloud cover reversal pattern yesterday, and so that is a strong reversal pattern, even though the candles were small. Today's black candle did not confirm that pattern. Okay, so the pattern is still there. If you get a red candle tomorrow and it drops lower, that would confirm the pattern, but the pattern has not been confirmed yet. If you look at the 15-minute chart, this is why I say that there's danger at the door for Amazon, because look how it's been in a sideways channel. It hit the top and then it just pretty much went sideways, and it's failing to break. It has to get above the high here at this 1530 level, right? The high close from today. And notice how it double topped today. It came up, topped, made another top, failed to break. So you've got the double top. I mean, some people say there's no such thing as a triple top, but it looks like there's one right here to me. Top, 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 failed to break, and it's dropped. And so, triple tops, I see them all the time, so I don't know what people are talking about with that, but it does happen sometimes. Sometimes the stocks do get rejected on the third try, and that's what appears to be happening here for Amazon, rejected on the third try at the double top level, and then now you've got the drop, and so now you've got the break below the middle Bollinger Band and below the 50-day simple or 50 simple moving average, the green line there. Notice how that was really big support, and it dropped below. That was a major red flag. Okay, so that signaled big downside risk. And then that last candle of the day, look how they really dumped it. I mean, they really sold it hard into the close. Now were people loading, or was this really heavy distribution? I would say it was dumping. It looks to me like people were locking in gains before they feel like it's going to drop lower. People are locking them in above 15,000. They're taking the money while they've got it, but with the uncertainty coming into again tomorrow. And then the big level to hold is going to be this double bottom level. So we have the one bottom, two bottom, and then now we're right there. This is the triple bottom. You have the triple top, and now you've got the triple bottom. If it breaks below 1512, that's when you're going to see it really move into the downside. It already closed below the 100 simple moving average at 1513. It has to get back above that level. It could bounce and get back above that level, and then it has to get above 1517. If the candles are still forming below the EMA 4, that signals downside risk. And then if it can get above, if it drops below that 100 simple moving average tomorrow, then it could really get cooking and test that 1500 level. That you've got the 200 simple moving average way down here at 1496, and notice there is an unfilled gap on the chart. So you have a gap here between low of day on this candle and high of day on this candle. So a drop below this, watch out below. If it gets down to 1507 and you see it break 1507, that's when it's going to go right to 15. There's no support. You know what I mean? So yeah, this is at all-time high levels. You know what I mean? This is very, very, very frothy, especially in a market that's pulling back. And now look at Microsoft. So Microsoft formed bearish engulfing reversal pattern yesterday, and that pattern did get confirmed today. Notice how it came up and it has the same double top as Intel. Okay, so this is what I'm trying to show you, how the sector is really looks like it's topping out to me. You have a top here, it came down, hit the bottom, and then now you've got the double top. A double top is a classic candlestick pattern. Okay, this is a classic chart pattern that many times signals a temporary top. if they can't get through the double top level, many times you're going to see consolidation. And here with bearish reversal confirmation, it's signaling that more downside risk. It also closed below EMA 4. Notice the gap did fill between the two candles. So you had the gap fill, and then it closed below EMA 4 at 93.87. If you see Microsoft below 94, that signals more downside risk. You have EMA 8 at 93.10, and then all the way down here, this could retrace down to that middle Bollinger Band at 91.50. Okay, that looks like where it's headed. It could, because if it fails to hold EMA 8, it's most likely going to drop down to 91. You know, since it's been running above EMA's 4 and 8 here, you know, only one time has it got below EMA 4 and it quickly got back above. And so now you have a close below today. If it turns into resistance, that's going to be your signal of a reversal, especially when it's forming at a double top and at a super elevated level. So yeah, are the markets just going to race from here and just take off higher? I mean, I find that hard to believe. If you look here at the Microsoft 15-minute chart, you could see here it hit a top and then it came down here, it hit the bottom. And then notice how it failed to make it hit the previous high, and so once again it's a sign of weakness, like the previous charts I showed you that had the same pattern. And so it never got back up to that 95.80, and it pulled back very strongly. You know, it's below the 50 simple moving average. It's below the 100 simple moving average. It bounced off of the 200 simple moving average into the close. This is why I was putting out warnings, you know, that this was breaking down, trying to warn people when it was up here. You know, watch out, there's danger, when we saw it double top and started pulling back. And so, yeah, the break below the horizontal support here signals downside risk. You can see this is where the gap did fill, and so the gap filled there. And then, yeah, now you're looking at a potential drop below down to the 300 simple moving average at 92.50 down here if this 93.50 zone fails to hold. Okay, yeah, thank you very much for viewing this video. If you'd like to learn more about charts and technical analysis and how to use this information to trade, you know, we've been using, you know, ETFs to trade options, to be able to trade the movements in the markets. And yeah, we'll just keep plugging away here. Thank you for viewing. Please hit the subscribe button if you could, and the like button. That always helps me. All right, I appreciate it very much. Come check out the chat. I'll post the link below the video.